Today, Mullen Automotive closed at $1.86 per share, down almost 15% from Friday's closing price of $2.18. This marks a continued slide in what's been a relentless downtrend, one that not even a 1-for-100 reverse stock split could slow. Let's be clear, this isn't just a red day. It's a signal. A signal that confidence in Mullen is evaporating, and that the market no longer gives the company the benefit of the doubt. The stock has now lost over 95% of its value from its pre-split adjusted highs. And while the price looks higher thanks to the split, the company's market cap and retail sentiment are still deeply battered. So what happened today? On paper, there was actually good news. Mullen announced a commercial order, the sale of their all-electric Mullen ONE Class 1 cargo vans to a freight forwarding company based in Glendale, California, Global Expert Shipping. These vans will be delivered via Pritchard Automotive, Mullen's dealership partner. And yes, it's a real transaction. Not a pilot program, not a hypothetical letter of intent, a sale. But here's the problem, the scale doesn't matter anymore. It's just not enough. We don't know how many units were sold. There was no dollar value disclosed. No fleet size estimate. And without that context, it feels more like damage control than genuine traction. One small order after a massive sell-off doesn't bring investors back to the table, especially not when Mullen has made similar announcements multiple times before, with minimal follow-through. This has become a pattern, and the market recognizes it. A positive headline followed by brutal dilution or a reverse split. Retail enthusiasm spikes briefly, and then reality hits. And right now, the reality is this? Mullen just completed its fifth reverse stock split since 2022. Yes, fifth. They're currently in the process of registering 200 million new shares for potential sale, creating yet another wave of dilution. And they remain on the Nasdaq only because the most recent split temporarily propped up the share price above the $1 threshold. That's not operational success. That's financial gymnastics to avoid delisting. Investors aren't buying it anymore, literally and figuratively. Let's talk about the psychology of it. For a long time, MULN was a beacon of hope for retail traders. An American EV underdog. A low-cost play with big upside. People believed in the technology, the idea of US-built vans, the potential for government contracts, green energy subsidies, battery innovation, the whole package. But every time the stock dropped, Mullen issued more shares. Every time the price fell below $1, they pulled out another reverse split. Every time enthusiasm began to build, they diluted it, along with the value of shareholders' positions. And what we're seeing now is the slow erosion of trust. Retail traders who once loaded up on thousands, even millions, of MULN shares are now watching their holdings shrink to pocket change. Many have been split and diluted so many times, their portfolios look like rounding errors. Fractional shares were wiped out. Thousands of dollars became tens of dollars. And those still holding? They're watching press release after press release go nowhere. Now, let's zoom out and look at the bigger picture. Today's price action, the drop to $1.86, is not happening in isolation. It's happening because the market has stopped rewarding headlines. Selling a few vans isn't going to justify a multi-billion-dollar valuation. It's not going to offset years of losses. It's not going to rebuild the credibility lost through repeated capital raises and lack of execution. These headlines, and let's be honest, they're not news, they're noise. Without audited revenue growth, real customer acquisition numbers, or large-scale contract fulfillment, they're just breadcrumbs in an empty pantry. So here's the takeaway. Yes, Mullen is still technically trading. Yes, they're still issuing press releases. Yes, they're still making moves to stay listed. But none of that matters unless they can prove operational success at scale. Retail investors, those who gave Mullen its momentum in the first place, are waking up to that reality. And every micro-sale, every small-time announcement without real substance, is now being treated with skepticism, not celebration. If Mullen wants to survive, truly survive, they need to stop marketing and start delivering. The time for narrative is over. The time for execution is now. Let me know in the comments, what do you make of today's announcement? Was it a positive sign, or just more of the same? And if you're still holding MULN, I'd love to hear what your plan is moving forward. Are you holding out for a reversal? Are you done? Or are you trading the volatility? Drop your thoughts below, And if you want to keep following this wild ride, be sure to subscribe. Catch you in the next one.